for those of you who do not know me, if it's your first time attending, my name is Bobby Graham. I'm with the Internal Revenue Service. I'm a senior stakeholder liaison located in Fayetteville, North Carolina. I am starting my 29th year with the service. 26 years were spent as a revenue officer in collections. So I feel like I've always been on the side of education. Now I can do that a little bit more on a bigger platform. So the goal is to keep you off the collection radar. So with that said, I want to jump right in to give you a guide on withholding and also estimated taxes, and also more importantly, ways to avoid the estimated tax penalty. So Derek, if we can go to the next slide, that'd be great. So, we want to definitely let you know you have options. You have options to avoid these penalties, okay, which is always a good thing. Adjusting withholding on your paychecks or the amount of your estimated tax payments can help prevent these penalties. This is especially important for people in the sharing economy or also the gig economy. This came on, this kind of hit us in the face when we got hit by COVID-19. So please keep that in mind, as some have continued to be part of the sharing or the gig economy. With those also that have more than one job, and also with those who've experienced major life changes. Life changes could be marriage, divorce, or the addition of a newborn. So those are life changes that also can have an effect. The IRS does have on the IRS website, and I strongly advise you to get familiar with our website, which is www.irs.gov/. And you can also put in pay as you go so you won't owe. Okay, this page will help you make sure you have enough tax payments during the year. So it helps take the guesswork out. Okay, so keep in mind taxes are pay as you go. I always use myself as an example, and I'm jumping ahead just a little bit because we do talk about estimated tax payments. In addition to working with the IRS, I'm also a soccer coach. I coach at a local high school, and I also coach at the local club. And both of these institutions give me a 1099. So now I've got to be very, very wary of making those estimated tax payments. So I'm also part of this program as well. Pay as you go, which is very important. So what that means is you must pay your tax during the year as you receive income rather than paying at the end of the year. Having enough tax withheld or making quarterly estimated payments during the year can help you avoid that large tax bill and penalties come tax time. Okay. Next slide, please. So there are two ways to pay your tax to avoid the tax bill and to file your return. Okay. One, as I mentioned, tax withholding from your pay, your pension, or certain government payments, such as Social Security, or as I'd also mentioned, your estimated tax, quarterly payments during the year. That's the one that affects me since I get a 1099 from the high school that I coach and also from the soccer club that I'm involved with. So changing your withholding or making estimated tax payments also helps to avoid interest or the estimated tax penalty for paying too little tax during the year. Now, ordinarily, you can avoid this penalty by paying at least 90% of your tax during the year. Again, you can see on the slide, it's got our website, www.irs.gov, and then /. You can put in keywords. In this instance, you're going to put in payments. Next slide, please. I'd mentioned changes in life. So changes in life can also affect the amount of tax that you owe. So as an employee, you don't have to make estimated tax payments if you have more tax withheld from your paycheck. So keep that in mind. This may be a convenient option if you also have a side job or part-time business. Okay, I mentioned the gig economy. So the IRS tax withholding estimator, this is an online tool that helps you determine the correct number to enter on your W-4. Again, it takes out the guesswork. When you fill out a new form W-4, which is the employee withholding allowance certificate, you make sure that you have the correct amount of withholding from your pay throughout the year. Okay, the IRS does offer an online publication that helps taxpayers to pay the correct amount of taxes owed. Again, that's available online, and that's publication 505. That publication is tax withholding and estimated taxes. Also, something to keep in mind, since this is all online and information that you input, the information is only as accurate as the information that you input. So keep that in mind as well. Okay. So questions that are asked, who should check their withholding? Well, everyone should check their withholding at the beginning of each year. Taxpayers who face an unexpected tax bill or penalty when they file this year. Taxpayers who made withholding adjustments last year. Taxpayers whose personal circumstances change. We talked about life changes. Um, those most at risk of having too little tax withheld. Those would be people who itemized in the past but now take the increased standard deduction. Two-wage earner households, employees with non-wage sources of income, and then those with complex tax situations. So those are the ones that should look into the withholding, okay, the changes. Next slide, please. So some income is not subject to withholding. Okay, this includes income from self-employment, some gig economy activity or rental activities. Um, be sure to make estimated tax payments on those sources of income throughout the year. Now, you may also make estimated tax payments if the withholding from your salary, pension, or other income doesn't cover your income for the tax year. So keep that in mind. To make your estimated payments based on the income you expect to earn and any credits you expect to receive in the year. I think back to my collection years in the field, when I'd meet, say, a drywaller who's self-employed. Well, Mr. Graham, I don't know how much to make. Well, you use your prior tax return. If I'm in the field and we're just thinking on our feet, well, to give them a common sense approach, what did you owe last year? Divide that by 4. That will be your quarterly payments. Well, that's a little too much. Well, then divide that by 12. Now you know what to put away per month in order to make your quarterly payment. So use that prior year's return as a good estimate. As I mentioned here, use your prior return as a guide. Form 1040 ES, which is the estimated tax for individuals, has a worksheet that's available also to help guide for estimated payments. You can use estimated payments to pay both income and self-employment tax. Self-employment tax includes Social Security and Medicare. Next slide, please. Now, you can also check your withholding as often as you like and also adjust it when your situation changes. To do this, you just fill out a new Form W-4 and give it to your employer, okay? The tax withholding estimator is also a very helpful tool that can be found again on our website. Again, we talked about changes in life, such as marriage, divorce, working a second job, running a side business, or receiving any other income without withholding can affect the amount of tax that you owe. Again, more information about using the tax withholding estimator or Form W-4. They have worksheets when you pull that information up. I mentioned new job. So start a new job, fill out the IRS Form W-4, give it to your employer. The tax withholding estimator, again, can help determine how to have the right amount of tax withheld or use the worksheet that comes with the Form W-4. Okay, again, you do have options. Now, the deadline for putting this into effect is the start of the first payroll period, ending 30 days after you submitted it. Okay, if you're working 2 jobs, have income from 2 jobs at the same time, be sure to include information about both jobs when using the tax withholding estimator, or complete only one set of Form W-4 worksheets that include both jobs. Okay. Now, the tax withholding estimator will recommend how to split the allowances between both forms, between the forms W-4 from each job. However, allowances can be claimed all with one employer and not with the other, or divide them either way. Okay, but it's not both. Do not claim the same allowances with more than one employer at the same time. For married individuals, okay, if both spouses are employed and expect to file a joint return, figure the withholding allowances using the combined income, adjustments, deductions, exemptions, and credits. Okay, use information from both spouses in the tax withholding estimator, or use only one set of Form W-4 worksheets that includes information on both spouses. Allowances can be divided in any way, but each spouse cannot claim an allowance that the other spouse also claims. In other words, no double dipping. If spouses expect to file separate returns, use a tax withholding estimator separately to figure each spouse's allowances based on their individual income adjustments, deductions, or again, as I mentioned, use a separate form W-4 worksheets. Okay. Now, if this is a lot to take in, I always mention at the end of my presentations, I'll mention it now. Find someone whose last name ends with CPA if you're needing help with this or you're needing someone to file that return. Now, getting the right amount of tax withheld. In most situations, the tax withheld will be close to the tax figure on the return when following these two rules. Okay. Accurately complete the tax withholding estimator or the Form W-4 worksheets. Second, give the employer a new Form W-4 when changes occur. Okay. Now, keep in mind the tax withholding estimator results or the Form W-4 worksheets I mentioned earlier are only as accurate as the information entered. So if you enter any incorrect information, well, then it's not going to be accurate. So keep that in mind. Take your time if you're going to do this on your own. If individual circumstances change during the year, come back to the estimator to make sure the withholding is still correct. Because the tax withholding estimator, W-4 worksheets, and withholding methods do not account for all possible situations, double check figures on getting the right amount withheld. Okay, you hear the old saying, measure twice, cut once. Use the same principle here. This is most likely to happen in the following situations. Married and both spouses work. I mentioned that earlier. Have more than one job at a time. Okay. Have non-wage income such as interest, dividends, alimony. Those are just a few examples. Unemployment compensation, another example, or self-employment income. Will owe additional amounts if you return such as self-employment tax. Withholding is based on obsolete Form W-4 information for a substantial part of the year. Now, I will also mention to you, if I mentioned earlier, publication 505, that has good information on tax withholding and estimated taxes. That can also be found on our website, irs.gov/, you can put in publication 505. Okay. Now, again, why check withholding each year? Again, it protects you. It protects you against having too little tax withheld and facing an unexpected tax bill or penalty at tax time the following year. Okay. Avoid too much withholding. You can receive more in your paychecks. Some law changes in the Tax Cut and Job Aids Act may also affect your withholding. Okay, so keep that in mind. Again, this is why it's important to check your withholding each year. Next slide, please. All right, so this kind of highlights the estimated tax payment due dates. You can see these, find these on our website at irs.gov/payments. Now, I've checked our website. The 2024 publication has not been put out in estimated tax payments. But the dates were April 18th for 2023, the payment was due. So January, February, March, you got the quarterly payment due April 18th. Then the next payment was due June 15th, September 15th, and then the following year, January 16th. Okay, so keep that in mind. Now, you may send your estimated payments in with Form 1040-ES, but we recommend it, since everything is going automated online, that you can also pay online. You can pay by phone. You can use your mobile device. You can use your mobile device by going to IRS To Go app, which is also on our website at irs.gov/payments. And then you can look at the various options there. The IRS To Go app is a mobile app, direct pay for bank account transactions. These are all safe, and they also, I believe, use the multi-authentication as well. Multi-authentication, have your cell phone with you that gives you an extra password. Now, Those of you that are old school and still want to mail your payment in, for all of us that live in North Carolina, you'd mail your payment to Internal Revenue Service, PO Box 1300, and that goes to Charlotte, North Carolina, 28201-1300. And that information can be found in the 1040 ES payment booklet that can be found on our website as well. All right, let's go to the next slide, please. Now, if you happen to underpay your taxes, you may have to pay a penalty. Keep that in mind. This applies whether you paid throughout withholding or throughout estimated payments. Okay. A penalty may also apply to late estimated payments. So, like I mentioned earlier, if your payment is due, estimated payment is due by April the 18th, make sure it gets to the IRS before that date. Okay. Even if you are due a refund when you file your tax return, so keep that in mind. In general, you don't have to pay a penalty if you meet any of these conditions. So the first condition, you owe less than $1,000 in tax with your tax return. Throughout the year, you paid the smaller of these two amounts. At least 90% of the tax for the current year, 100% of the tax shown on your return for the prior year. Now, this can increase on 10% based on your adjusted gross income. Now, to see if you owe a penalty, we recommend that you use Form 2210. The IRS may waive the penalty if someone underpaid because of unusual circumstances, okay? Not to unwillful neglect, okay? So unusual circumstances could be casualty, disaster, or any other unusual circumstance where an individual retired after reaching age 62 during the tax year when estimated payments were applied. An individual became disabled during a tax year when estimated payments were applied as well. So if you're a first-time, I want to say it's safe to say if you're a first-time offender, IRS will probably give you reasonable cause for abatement. Okay. Now, what if you ask yourself, what if I don't have enough withheld? Again, to go over, again, use the directions provided by the tax withholding estimator to adjust withholding on Form W-4. The results page provides a link on Form W-4 on irs.gov that I mentioned earlier as well. Now, some employers or pension payers may allow you to change a W-4 electronically. There are alternative ways to pay your tax, such as having an extra flat dollar amount withheld from your paycheck. You can check that with your employer. You can change, and you can make this change on your Form W-4, making estimated tax payments to the IRS throughout the year. I sometimes do that if my income with the soccer increases, then I do that during the year. And then I'd mention those payment options at irs.gov/payments. Okay, now, again, what if I have too much withheld? So you can leave your withholding as it is if you want. To adjust it, use the steps suggested again by the estimator to submit a new Form W-4 to your employer or a new Form W-4P to a pension payer. The estimator, again, can help you determine how to avoid a large refund, put more in your regular paycheck. Sometimes we do want that. We'd rather have more on our paycheck to take us with our everyday living as opposed to getting a larger refund at the end of the year. You can get your balance as close to zero as possible. Then you can also choose a refund amount. All right, moving right along, we can go to the next slide, please. All right, so this next slide it's kind of a review at what we have at irs.gov. And my notes kind of match what we have here on the slide. Again, you can put in, first Google www.irs.gov / you can actually put in pay as you go so you won't owe. You'll have this information populate. You look at your tax withholding, estimated taxes. You can look at the gig economy tax center. You can look at information at Social Security tax, Medicare tax, and self-employment. Self-employed individuals tax center, business taxes. This will also lead you into the 1040 ES, estimated tax payments for individuals. Earlier I'd mentioned that Form 2210. that Form 2210 is underpayment of estimated tax by individuals. That also talks about estates and trusts. Okay, so really good information there. Next slide, please. So this goes into more forms and publications. That's very helpful. I mentioned publication 505. I mentioned the Form W4, 1040 ES, the Form 2210. I also want to highlight, it's not mentioned on this slide, but I want to highlight publication 583. Publication 583 is starting a business and record keeping. That has really good information as well, if there's anybody out there that is starting a new business. So a lot of this information is available at your fingertips. Okay, and then next slide, please. Last but not least, there's my personal information. If anything comes up, I do go by Bobby Graham. There's my direct number. I promise if you call me, you will not listen to elevator music. I do try to get back with you within 24 to 48 hours. Now, my email address, that's Robert L, not I. So my email address is robert.l.graham@irs.gov. So you have my personal information there. If anything comes up, I want to be respectful to Ms. DeMaria with the North Carolina Department of Revenue on her presentation. If there are any questions now, we look to field them now. If you want to put them in an email format to me, you can. If not, I will turn it back over to either Sharonetta or Sharonetta, I'll turn it back over to you.
Okay. All right. Thanks so much, Bobby, for the information. Just want to do a quick check here to see if there are any questions before we move forward.
Okay.
There are none in the chat at this point. Okay. So just a quick acknowledgement if there are any questions.
And if any come up later on during
okay.
the next presentation, please shoot me up with an email and I'll be glad to circle back.
All righty. Okay, if there are none, we're going to keep moving. And so Ms. Kayla DeMaria will be talking to us about estimated taxes at the state level. So I'll turn the floor to you.
Thank you. Thank you guys again for this opportunity. Great presentation, Bobby. So my name is Kayla DeMaria. As people have referenced at this point, I am with the North Carolina Department of Revenue. So I'm going to go over your state implications. That's one thing that I always try to make very clear in the beginning, which of course, when Bobby's here, it is helpful in that to let you guys know that we are the state. People often think we are the IRS or use us interchangeably. But again, everything Bobby just went over is your federal implication. I'm going to talk about that state implication. So again, my name is Kayla DeMaria. I have a very similar background to Bobby, just not quite as many years of service as him quite yet. But I started off in the collection division with the Department of Revenue. I've been here for 9 years, and I'm currently an administrative officer. So great to see everybody here today. And again, thank you guys for the opportunity. So I'm going to go into estimated income tax. So if we can go ahead and go to next slide. All right, so the disclaimer, I'm going to go ahead and skip over that because this one's just a little bit unique. The only thing I'm going to make reference to is just know that this is general in nature. It's not meant to be interpreted as specific tax advice. If you have any questions, feel free to ask me if time permits at conclusion, or you can always contact the Department of Revenue directly. We'll go next. All right, so our topics of discussion, I'm going to do this a little bit different than what Bobby did, just in the way in which it's approached, I guess I should say. So my presentation is going to actually start off with estimated taxes. Then we're going to get into withholding from an employer. I'm not exactly sure the scope of the audience we have on the line with us today. So again, we're going to address both aspects of it, and we'll see which one applies to you all. So next. All right, so what are estimated individual income tax payments? So this is actually responsibility of anybody within the requirement of filing an income tax return for the state of North Carolina. So what it is, it's the amount of income tax that you expect to owe for the year after you subtract the amount that you expect to have withheld or any allowable tax credit. Now, generally, when you contact somebody at the Department of Revenue, they're going to say more often than not, the individuals that are responsible for making estimated tax payments are those of which that are self-employed. Because if you're self-employed, generally, you're not actually considering yourself an employee of a business, and you are just going to 1099 yourself. So with that being said, that's whenever you are a contract worker, you're not actually having that tax withheld. So this is basically in lieu of that. But as I mentioned, technically anybody could be responsible for remitting these. I am personally an employee of the Department of Revenue, so I have tax withheld from my wages, but I could be assessed this interest just like anybody else if, again, whenever I file my tax return, if I owe the state of North Carolina $1,000 or more, after they take into consideration my tax withheld and any allowable tax credit, I would be assessed this interest again, just like anybody else. So just keep in mind, if you owe the department $1,000 or more, that's when this interest would be assessed. Next slide, please. So I kind of killed two birds with one stone on that previous slide on who must make these payments. Again, it is anybody that were to owe the state of North Carolina $1,000 or more after we take into consideration your withholding and any allowable tax credit. It is something that more often than not, we do see self-employed individuals that are responsible simply because if, for example, again, I'm that W-2 wage earner, I'm just going to make adjustments to my withholding that is taken from my payroll rather than also doing an estimated tax payment on top of that. Next slide, please. So when are estimated tax payments due? This is in general, and this calendar can be a little bit misleading because that January 15th is actually of 2025, not 2024. So just want to mention that. So generally, estimated tax payments are going to be considered timely filed April 15th, June 15th, September 15th, all of which are 2024. And then that January 15th, which is your last 2024 estimated tax payment, is actually done in 2025. And that's because if you file, well, when you file your 2024 tax return, you're actually doing that process April 15th of 2025. So that's why, again, that January 15th one is a little bit unique if you've not paid these before, but it's just that last attempt at paying what you need to before, again, that return is timely filed April 15th. Next slide, please. So that, again, I had mentioned that that's generally when they become due. This is a question we get very often is, well, Kayla, how would I know if I'm even responsible for making these? I've never heard of these before. Again, it really is dependent on if you're a business or not, if it's going to impact you drastically versus you being a W-2 wage earner, because normally, again, you're going to make adjustments to your withholding allowance certificate. But if you meet the requirement at a later date, like Bobby, for example, had mentioned that he does some, I believe it was soccer, I'm sorry, but does, some side work with that. So that's something, again, if you meet the requirement later, because maybe you're like, well, hey, I'm making ends meet right now, but I actually want to do this job again so I can go on this nice vacation or just make ends meet a little bit nicer than what I currently am. So whatever the situation is, you might meet a requirement that's not that nice, pretty quarterly scenario I just talked about earlier. So if you're seeing that, again, life changes have happened and you've got a new job or things of that sort, then you might, again, later meet a requirement. Well, the due dates are, of course, going to fluctuate based on when you start meeting the requirement of, I think I'm in a financial position that I'm going to actually need to start making these estimated tax payments. So again, if it's not in that quarterly fashion, then it's really dependent upon when you meet that new guideline. So for example, if I see that something has changed, maybe I've gotten a 1099 work job, and that happened June 1st, then my estimated tax payment would be done September 15th. And then on the actual installment worksheet, we do have the different due dates that could apply and when those payments would be considered timely filed and paid from there. So I don't want you to think that you have to memorize this. I'm not going to be able to go over the nitty gritty of absolutely everything with estimated taxes in the 25-30 minutes I have today. So I am going to refer everyone to that worksheet at conclusion of the presentation. Next slide. All right, so this is that worksheet I had made reference to. So our equivalent of what Bobby had talked about in his section. So at the state level, we call those forms the NC40. Again, generally this process is done 4 different times, but you can see hopefully from the screen well enough that very first column towards the bottom, it says, when do you pay your estimated tax payments? That's what I just spoke on, is we do identify, okay, if you meet it at a certain time frame in that calendar year, this is when they become due. We also have a section for farmer and fishermen that I'm going to talk about in a minute, but they operate a little bit uniquely. In my 9 years of experience, I've never had someone that was a fiscal year filer for individual income tax purposes. But if you are, then that would address you. And just briefly, if you don't know what a fiscal year is, it's any year that does not begin January 1st and end December 31st. Again, generally for individual income tax purposes, people are calendar year, so that wouldn't apply to you if you're not fiscal year. Now, the portion that we've got highlighted is interest for failure to pay these. So Bobby had mentioned that his were considered a penalty. Ours for state tax purposes are considered an interest. And the reason that verbiage variation is actually important is because if you were to ever request for a penalty waiver for your income tax, we will not waive this because, again, we do not by statute waive interest. And this is, again, considered an interest. So on the middle column, again, the portion highlighted, we do have emphasized ways you can alleviate being assessed that interest. I know the verbiage is very small, but there's option A, B, and C. Now, option B is the one that I have, from my experience, seen people utilize the most. And that says 100% of the tax due on your previous year's return if your previous year return was a taxable year of 12 months. So I tell people to use that as your basis. And then at the very bottom of that highlighted, it says underpayment interest will not be due if you had no tax liability for the previous year. So people always notice that box or that verbiage, and I understand why. But we do give you that first year of not assessing you the interest. We are hoping that once you get that first year of basically a freebie, for lack of better words, that you use that as an opportunity going into the next year to start making these estimated tax payments. So if I were to owe on my 2023 return, which is the current year we're filing, most of us have probably already done that process. But if I see that I owe, for example, $1,200, then I'm going to use that as my basis to make estimated tax payments in 2024. So as long as I pay over the $1,200 that I reflected due on my 2023 return, then I'm not going to be assessed this interest. This 422 that is shown on the right-hand side is if basically you want to self-assess yourself the interest. More often than not, I see people that hire out professional guidance do this on behalf of their clients. But this is something that if you don't hire someone and you yourself file, then you can complete the 422 and again, go ahead and self-assess your interest. But do know if you don't do this process and we do see that you should have done this process and didn't, we will send you a notice of collection. So it's not something that's necessarily required, but just something you can proactively do. Next slide. So on that NC40, it also showed the exception for farmer and fisherman. I don't know, again, if that would apply to anybody on the line with us today. But what we deem a farmer and fisherman for this specifically is if at least 2/3 of your estimated gross income is from farming or commercial fishing. then your estimated tax may be paid at any time on or before January 15th. Now, if you file your tax return on or before March 1st, you don't have to actually make that estimated tax payment. So if you are a farmer or fisherman and are claiming that you don't have to make that estimated tax payment because you're one of the exceptions that meet those criteria, then you would place an F indicator on your tax return. Next slide, please.
And so, Kayla, just a quick note: we
Yes.
do have firms. We do have firms that are in the farming business.
Perfect.
At least one of
Okay.
them is on this morning. So,
Okay.
of course, they'll have contact information. So, if there are any particular things that do apply,
Yes.
then please do share those. Thank you.
Yes, thank you.
All right.
So with that being said, and since I now know that, thank you for letting me know. I just want to mention that is, of course, there's more extensive information than what my webinar today has time permitted for, but I often get to ask the question because I actually primarily teach sales and use tax. That exception for individual income estimated tax payments has really no direct impact on any sales tax implication. So it does not matter if you're a conditional farmer or a qualifying farmer for sales and use tax purposes. If you meet the requirement of this estimated tax, farmer and fisherman, then again, whether you meet that sales tax requirement or not, there's no direct impact. So just wanted to mention that. And if the farmer we have on the line has any questions about that, of course, I can get with you separately as well. Now, how do you actually go about making these estimated tax payments? Just like anything at the Department of Revenue, we encourage you to do that process electronically. They are, again, done on the form NC40. So the instructions and worksheet are, of course, beneficial. The worksheet, which I did not show specifically, lets you know really where you're at. So kind of like that worksheet that Bobby had made reference to that the IRS has. So that, again, can gauge where you're at in that calendar or fiscal year. And of course, if you have the requirement, again, we do recommend that you electronically file. One thing that I want to mention on this before I forget is if you file a married filing joint tax return, we do need both spouses' information on there. The form does make reference to that. But again, in my work history at the Department of Revenue, it is in very small print and often overlooked by your average taxpayer. So it really goes back to, again, how you file for income tax purposes. And I think where some people get confused on that is, let's say that I am, again, that W-2 wage earner, and let's say my spouse is the one that's actually a 1099 contractor. Since I'm a W-2 wage earner, people often think, well, the responsibility is actually on her spouse, not her. So they'll just put the spouse's information. But again, try not to think of it of whose liability is it, like individually. If you file jointly, it becomes a joint liability of this estimated taxes. So again, put both Social Security numbers on there. Next slide, please. So I've already gone over this quite in depth at this point in time as well. So this is something that, again, we would strongly encourage you look at our instructions. They are very good, detailed. We also have information in our personal tax bulletin. But with this kind of reference, honestly, the worksheet or the NC40 instructions really hit home. So again, it tells you what they are, who's responsible, when you need to pay them, ways to alleviate being assessed that interest, and then the way to self-assess yourself as well. So very good information. Page 2 that's not shown is the actual worksheet for you to identify, are you a taxpayer that's responsible for actually making these? Next slide, please. So the D422 is, again, as I mentioned previously, a way for you to self-assess yourself the interest. There is a short method that is done, and then there is a long method that is done. It really is dependent upon if you've made estimated tax payments versus not. As I mentioned, if this form is something that you've never seen before, then it is something, if you've ever been assessed the interest, then you know from receiving the notice of collection, we will go ahead and process that interest on your behalf and then send you a notice in the mail. So again, this can be proactively done. A way that I've seen it, honestly, more often than proactively being completed is actually when we've gone through the process of assessing a person an interest and they are disputing it. You can technically use it for that service again, or purpose, I'm sorry. But again, it's technically supposed to be a proactive approach rather than a reactive. But I have seen it done either way. If you are doing it from a proactive approach, you will include the interest that you see owed to the department on your actual individual income tax return, which is the form D400 on line 26. Now, the D422A is for a taxpayer that receives annualized income. That's if you, for example, operate a seasonal business. People who also get large lump sums of money towards a specific time. If you're someone that has a benefit of receiving a bonus, that is something that, again, if you don't get that income evenly, that could push you to the point of needing to complete estimated tax payments, or again, completing this worksheet and seeing if an interest is owed to the Department of Revenue. Next slide, please. So now getting to the employer perspective, or employee rather, I should say. So again, I had acknowledged that I am a W-2 employee. So I completed a withholding allowance certificate when I first started at the Department of Revenue, and I've since maintained it with them. Bobby had talked about their withholding allowance certificate. Theirs is called the W-4. Again, if you are an employee in the state of North Carolina, you remember that first day you're hired, you get that W-4 and then an NC-4. So this is, of course, the state one. I've only got 3 listed here. There's technically the NC4P as well. I'm only going to get specifically into the NC4 and the NC4EZ. So just know there are other variations of withholding allowance certificates. However, for the general audience that we have on all of our webinars, it is primarily going to be the NC4 and the NC4EZ. Next slide, please. So the NC4, that is the expanded version of the Employees Withholding Allowance Certificate. I believe it's about 6 pages in length, but people utilize the form NC4 if they claim itemized deductions, for example. That would be a reason. If they have more than one job, they very often use the NC4. So again, it's really your average taxpayer that is completing this. And next slide, please. I'm going to tell you why in a second. All right, so the NC4EZ, and again, why primarily people end up doing the NC4 is because only certain people can utilize the NC4EZ. So you can only use this form if you plan to claim the standard deduction. Well, if I itemize, that immediately means that I need to complete the NC4. If I claim the the child deduction, but no other deductions, let's say, for example, that I have a miscellaneous deduction such as daily retirement, that's again something that would knock me out of this one. Do not claim tax credit. So if I had paid tax credits to another state or country, for example, I would use the NC4, or if I qualify to claim exempt status. So of course, you guys know your specific fact pattern more than I do, but if you can tell from this chart, and it is on the form itself as well, but if you know, again, just for example, you itemize, the NC4 is going to be the one you're going to utilize. Now, since this is a way to claim exempt, we do have guidance in our form NC30 document that tells, different people, whether you're an employer or an employee, if you could be exempt from withholding. I do want to mention, if you're exempt from withholding, that does not mean you're exempt from filing an individual income tax return if you meet the requirement, and you're actually responsible for remitting those NC40s I talked about earlier. I want to use this as an opportunity to mention as well that you don't have to renew this on an annual basis or any established frequency unless you claim exempt. So if I claim exempt from withholding, I have to renew this withholding allowance certificate by February 16th every year. If I don't claim exempt, so again, I'm personally not exempt from withholding, So since I don't claim exempt from withholding, I again don't have an established frequency. I have to update this. Now there might be some life changes that I willingly do this process. For example, again, if I am going to do some like gig economy work, then I'm going to make adjustments to my NC4 versus taking on that responsibility of the NC40 as well. All right, next slide, please. So some resources, we'll go next. So gig economy work, that's something that I briefly just used that word a few seconds ago. But that's something that we saw an influx of, especially with COVID. People doing a lot of gig work more than they ever had in years past. Just some examples of that is people who do like delivery services or rideshare companies, so like Uber and Lyft. Very often they are not deemed employees of the business. They are actually contract workers of the business. So independent contractor, freelancer, like freelance photography. Again, 1099, that could be a whole webinar itself, the difference between an employee and a 1099. But 1099 for tax purposes is, I guess, for lack of better words, easier because the tax burden falls on like me personally. So if I'm a contractor, the person that is hiring me for that work is going to issue me a 1099 and not have to give me a withholding allowance certificate. Again, that's going to come on me directly. So that's when I'd be liable for those estimated income tax payments I had talked about at the beginning. Or we actually recommend that if you're impacted by independent contract work or freelance work, and you are also a W-2 wage earner through an employer, to again make adjustments to your withholding. You can go ahead and do estimated tax payments, but as I mentioned earlier, if I can just make adjustments through my W-4 and my NC-4, I would rather do that than again also taking on that additional responsibility of estimated tax payments. Next slide, please. As noted in the beginning, we are not the IRS. That was the lovely Bobby that you guys heard this morning. So we are two separate entities, but we have partnered with the IRS to create a tax calendar. Our information is in blue and theirs is in green. So there are different tax liabilities and tax due dates at both the federal level and the state level. This is a lot to keep up with, whether you're a business owner or not a business owner. Again, it's a lot of different things that come to play. So you can utilize this free resource. You can look at it, you can print it, whatever the case may be, but you can look at it month per month and again, see those federal due dates versus state due dates. Next slide, please. We also encourage you to subscribe to our e-alerts on the Department of Revenue. It is a free resource that you can either subscribe to text alerts or email alerts. But basically the purpose of it is notifying you whenever a tax notice comes out, a tax rate changes, any kind of impact basically that we've had on a specific tax type. Once you go to subscribe, you can designate which tax types you're curious about getting alerts with. I can tell you from me personally receiving them, we don't send them out even necessarily weekly. It seems silly to say, but it truly is based on when something has changed. So if we have issued a new notice or again, a tax rate's changed, so that's not again on an established frequency where they do it every single week or every month. There's going to be time lapse of several months that you won't get anything. But no matter what, we send you one email for those specific ones that you subscribe to, and then that's it. So we don't email you 3 and 4 times a day or anything like that. Next slide, please. We also have other webinars. This one, of course, was a very abbreviated version of one that we teach. All of our webinars are free of charge. So again, if you're a business owner or know someone that is, we do teach to small businesses. If you're very well established, then that's one that you might gain some information from, but it's more so those newer businesses that are just starting out and seeing those state implications that affect them. We also have webinars in Spanish. We do have a couple of them for personal tax. So we even have one coming up fairly soon for estimated taxes with the IRS again. Next slide, please. We also have a tax resource library, some on-demand resources. We also have a YouTube. So as mentioned in chat earlier, this will be posted to their YouTube channel. We very similarly have a YouTube channel as well. So feel free to see what resources you can find on those platforms. Next slide, please. We also have a service center or multiple service centers, and we also have a contact center where you can contact us via phone. I get asked the question a lot on, do I have to come face to face? And honestly, that's a personal preference. You do not have to. There is very little things that you have to do face to face at the Department of Revenue. 99% of the time, everything can be done over the phone. So don't feel like, again, you have to make an appointment or go to a local service center. You have that option. If you just want to call us, you can do that as well. Our contact center is open from 7 a.m. to 4:30 p.m. Service centers are a little bit unique. I would recommend you look at the website if you want that face-to-face interaction at a service center local to you. Next slide, please. So some important reminders, just know that estimated tax payments are generally due quarterly. There are times that you would meet the requirement that isn't done quarterly, so I'd recommend you look at the NC40. I do encourage you e-file those payments. You can also go ahead and time out the payments as well on when you want to draft them. That would be beneficial, especially if you're doing it quarterly. Another gentle reminder, if you're married filing joint, put both spouses' information. I do recommend as well everyone subscribes to e-alerts. And if you feel like you'd benefit from our other webinars that are more so focused on business, but we do have some income implications that we go over as well, feel free to attend those or again, share our information. And next slide. And I do want to thank you. And again, thank you for partnering with the department for this one.
Thank you so much, Kayla. That was great information. And we do have a couple of questions in the chat. Esther is asking, or I'm sorry, Esther, hold on just a minute. Can you please explain sales tax for a new business owner as a general contractor? I was looking to register online for tax withholding and saw sales tax as an option to register as well.
Okay, so I'm assuming they're talking about our business registration application. So if you go to our website and look at our business registration application, you can register for both simultaneously. So I can actually, if I can, pull up my screen and see if this is what they're referring to. I just want to make sure we're all on the same page.
Yes, ma'am, that's correct.
Okay, okay.
Yep.
So let me go ahead and pull it up just so all parties are on the same page. All right, so this is our business registration application. Actually, even though this isn't directly applicable to estimated tax payments, still something important I want to mention. We do not charge for this. And I know this wasn't your direct question, but something that's kind of opening the window for me to talk about it. We get the question quite a bit on, you know, I did the application and I got charged a fee. We don't charge a fee. So please make sure you're going to ncdor.gov. It might be that if you're having someone complete this for you, they might charge you a fee for the act of doing so, but the department does not charge. Some states do charge, so just want to mention that. But this is our business registration directly with the Department of Revenue. So here is, of course, for the withholding tax number, and then here's for the sales tax or other applicable number. So what was the question specifically? You're going to be a general contractor?
Correct. So I am a new business owner. It's only myself in the business. And I went there because somebody told me, hey, you need your ID number for the state, for the Department of Revenue. So when I went there, I'm like, okay, the questions are fairly easy. And then it got to that point, and I'm like, I don't know if I need both or just withholding.
Okay. Yeah, that's something that maybe just due to time we could even take offline if you're good with that. and we can kind of go over exactly what you're going to be doing and see if this would be applicable to you. Because the fact that you're even going to be a contractor, I'd want a little bit more information to know if you're going to deem yourself an employer or a contractor. Because if you're a contractor, so like a 1099, you actually don't even complete this. So I want to make sure that you were informed correctly to begin.
Okay, thank you.
Uh-huh.
All right. Thank you. Thank you so much.
Ada, that's a great question. Oh, sorry about that, Shay.
Yeah, go ahead.
No, that's a good question and good information, Kayla. I just want to also add, check our website. I was doing a little bit of research, and I did find the sales tax deduction calculator does help you figure the amount of state and local general sales tax that you can claim when you itemize deductions. So I'm not sure if that helps in your equation when you are working with the Schedule A. Okay, Ada. So just double check. You can compare both websites, but that's good information from Kayla. Now, Kayla, on your presentation, I just wanted to add, you mentioned when companies give out bonuses, and that made me think back to my collection days. Folks, if any of you work for large companies that do give out bonuses, if I recall, these companies, when they give out bonuses, I believe if they give a 1099 on those bonuses, that's self-employment tax. So don't be surprised. Plan ahead on those bonuses. If you know you're going to get a bonus every year, especially around the holidays, plan on those bonuses and then plan on making an estimated tax payment on it, or plan ahead on getting more withheld out of your paycheck. When Kayla mentioned bonus, that kind of resonated with me because I've seen that happen when I was a revenue officer in collections, where there with Mr. Graham, I'm working for a company, am I not having enough withheld? Well, when some of these employees are working for these established companies that can afford to give out these bonuses, that's when they get caught with these undue surprises. So just double check with those employers that give out bonuses. Are they going to give a 1099 on those bonuses at the end of the year? I just want to add that, but very good information.
All right. Well, thank you again so very much to the both of you. And then we just had one, let's see, last question. Do you have any recommended CPAs? Now, from Hub's standpoint, because we have so many firms that are CPAs, we're not able to make specific recommendations. You know, we can always generate a list of who those CPAs are for you, but we encourage you really just to talk with other business owners that are using CPA services and get recommendations that way. And I see where Yvonne posted one into the chat also. So again, thank you everybody so very much for participating on today.